Hello guys, for today's video, we will talk about the Relative Strength Index or RSI. You will know what RSI is, what trading strategies you can use with the help of RSI, and lastly, what mistakes you need to avoid using the RSI indicator. So if you want to learn more about this, make sure to finish this video and don't forget to like and subscribe to the channel so you don't miss new updates. With that being said, let's get started. In this strategy, I will use the RSI Relative Strength Index. The RSI is known to be the foundation of all trading strategies. Most traders commonly use it, and even I personally use RSI on most of my trades. Technical analysis uses the Relative Strength Index or RSI as a momentum indicator. It displays the early indicators of momentum before it ever happens. The RSI has a range of 0 to 100. If the RSI exceeds 30 level, the asset is considered oversold. It means buyers will sit in and raise the price. In contrast, the 70 level RSI implies that the asset is now overbought, and the sellers will now step in to push the price down. In today's video, I will share with you 3 simple and easy but profitable trading strategies that mainly use the RSI indicator. So without further ado, let's jump to it. The first on our list is using the RSI indicator alone. This strategy focuses on RSI as a significant confirmation for entry. Let's go to the chart. This strategy works on all time frames, but for this video, we will use it in 1 hour time frame. Now apply the RSI indicator and the volume indicator. Your chart should look like this. Now that we are all set, let me discuss the entry condition. For taking a long position, first, we need to see that the RSI line crosses below the 30 level. The second confirmation that we are looking for is the manifestation of divergence. A bullish divergence should appear before the RSI line crosses above the 30 level threshold. The third confirmation will be the volume in the market. The volume should be strong. It shows that there is a substantial volume in the market that will guarantee an upside move. Let me give you an example. Look at this chart. We can see that the RSI crosses below the 30 level. That's our first confirmation. After 12 candle bars, the price continues to go down, but the RSI is going up. Thus, create divergence. And a candle later, the RSI line crosses back above 30 level. And at the exact moment, the volume indicates intense buying pressure. This is now a buy zone. But wait, take a look at this candlestick pattern. This is a bullish engulfing pattern. Now we have our 4 confirmations for this trade. Now for our entry position, we will put it at the candle close where the RSI crosses above the 30 level. In this case, this candle. We will then place our stop loss below the previous swing. Let's extend it a little lower so it doesn't get stopped easily. Then, we will set the exit price at 1.5 times the stop loss. Now let's try this strategy on a short position. First, we need to see that the RSI line crosses above the 70 level. The second confirmation that we are looking for is the manifestation of divergence. A bearish divergence should appear before the RSI line crosses below the 70 level threshold. The third confirmation will be that the volume should be strong. It shows that there is a substantial volume in the market that will guarantee a downward move. Look at this chart. We see that the RSI breaks above the 70 level. That's our first confirmation. And the RSI goes below the 70 level without showing any bearish divergence. After a while, the RSI breaks above the 70 level again, that now shows divergence. That's our second confirmation right there. Now for our third confirmation, we will wait for the RSI to go back below the 70 level with a volume above 30 moving average. We can enter this trade. We can also see that it formed a bearish engulfing pattern, which will add confirmation to this trade setup. Now for our entry position, we will put it at the candle close where the RSI crosses below the 70 level, in this case, this candle. We will then place our stop loss above the previous swing. Extend it a little lower so it doesn't get stopped easily. Then we will set the exit price at 1.5 times the stop loss. And that ends our first trading strategy using RSI. Now let's proceed to the next one. This strategy will use 200 moving average as an additional indicator. If the price action is trading above the 200 moving average, we will only take a long position, while if it trades below, then we take short position only. Let's set up the indicators. This strategy best works on 1 day time frame. Now, apply the RSI indicator, add the 200 moving average indicator, and lastly, apply the MACD indicator. Now that we are all set, your tab should look like this. Next, let me discuss the entry condition. For taking a long position, first, we need to see that the price action is above the 200 moving average. In this way, we are confident that the trend is only uptrend. Second, the MACD should show a bullish crossover. A bullish crossover is when the blue line crosses above the orange line. Lastly, the RSI should be seen above the 50 level line. This is an additional indication that the market is in uptrend. Now that we know the conditions, let's look for an entry position. The best entry position is when all conditions are met. Look for the exact candle where the MACD formed the bullish cross. If the candle also traded above the 50 level RSI, then place your entry there. For stop loss, we can put it a little lower than the previous swing low, while the exit price should be set up 1.5 times higher than the stop loss. Let's try now to set a short position. Make sure that the price action is trading below the 200 moving average. Look for the exact candle where the MACD formed the bearish cross. A bearish cross is when the MACD line crosses below the signal line. If that candle also traded below the 50 level RSI, then place your entry there. For stop loss, we can put it a little higher than the previous swing high, while the exit price should be set up 1.5 times the stop loss. As you can see from my examples, as long as the price action is above or below the 200 moving average, it can give you continuous entry signals. So it's important to focus on the 200 moving average to determine what position is best to take. Let's check the chart. This strategy best works on 1 day time frame. Now, apply the RSI indicator. We will need the RSI 60. Now add the 99 moving average. Now we are all set. Your chart should look like this. For entering long position, we need to satisfy these conditions. First, the RSI should trade above 50 level. Second, the candlestick should close above 99 moving average. Once confirmed, we will now enter at the next candle close. We will set the stop loss on the previous swing low and we will exit when the RSI trades below 50. Now for taking a short position, we just do the reverse. Check for below 50 RSI level, check candlestick closes below 99 moving average. Once confirmed, take the short entry at the next candle close. Then place the stop loss at the previous swing high. And for the exit price, we wait until the RSI gets back above 50 level. That concludes the third and final strategy in this video. Now if you like this video, please hit the like button and subscribe to our channel so you don't miss any videos like this. Until next time, see you.